I am so freaking bullish right now on these cryptos, guys. It is insane. Look at what we're witnessing. This is not normal. There's a lot going on behind this, and today I want to talk about some theories and some thoughts, so make sure you watch it all the way through. But also, we will be giving away 100 XRP, and all you have to do is make sure you press the like button, make sure you are subscribed, and make sure you comment something down below. And check out the Growth Masters Academy, link in the description. Having said that, guys, let's first dive into some of the tweets that Brad Garlinghouse sent out, as I think you guys have gotten the notion of what he wanted to say, but the real tweets and his exact words, I think a lot of you guys missed. So I opened this up like 5 minutes maybe after he posted it. Right now I think we're like 15 hours farther, as you can also see in the amount of likes that it has now got. But it's been crazy, all right? He's been posting a lot of facts online, and I think it's rather important to cover this. He said, never a dull moment in crypto. Well, yeah, honestly speaking, crypto is always interesting. There's always something going on, even if prices stay down, so that's already quite true. Institutional interest is skyrocketing. We've seen that heavily when we saw that retail hype was not really there just all that much, but the price was still going up like crazy, meaning either crazy manipulation, but even if that was the case, it is always the institutions that are behind that. Industry growth comes down to real-world utility. That's true for every crypto, and as a part or as a store of value, Bitcoin is an extremely useful inflation hedge, like gold, and XRP's speed, cost, and scalability make it extremely useful for payments. As Brian O'Keefe, Robert Hackett said, it's all about the use case. Regulations need to recognize the potential of these technologies and provide a level playing field for responsible industry participants. All boats rise. So I'm still really waiting for the day that the SEC and the OCC come out and say, you know what? We think XRP is just a normal everyday currency, something like that, or it's just not a security, and we can just move on and we can all be happy and joyful. That's not the case today, though. It does not matter even though. Some guys have speculated, yeah, we need it to be certain before the price can go up. Wrong, not the case. If it were to be ruled out, and it were to be not a security officially, yeah, we would get some crazy spike going in price, yeah. And yeah, Ripple can expand crazy quickly, true as well. But that's not necessary. We saw in 2017 with more than ever, just I guess, hype and uncertainty at that point, that prices could still get to almost $4. So this time, now that we know that Ripple is legit, now that we know that Ripple has real fundamentals and what they're building is something useful, and even could bridge the CBDCs, there's no doubt in my mind that that currency is going to be very, very phenomenal. But yeah, we also have another cool episode between A. Pompliano and Brad Garlinghouse coming up here, which is going to be rather interesting. I'm really wondering what exactly they're going to be talking about right there. I guess some people don't want to hear it, which is going to be rather interesting. But Brad also posted, thanks FinTech Frank for having me on. I think, and again guys, I'm thinking this with some broader perspective, right? I think right now Brad and the whole Ripple team are trying to get out as much as possible because the bull run is coming up, right? They want to get their name out as much as possible, get their story out, because they know institutions are looking for crypto right now. They know institutions are want to get in, and they know mainstream attention is going to be brought to crypto these couple of days. And as I've said before, if I wanted the most amount of growth for my channel, I should have been posting these couple of days when crypto goes bullish. But again, sometimes there are more important things to do. Think about maybe family or getting yourself more money in crypto or even getting more knowledge. But it's been such a crazy time, and I think Brad knows that as well. He has to get his name out there. He has to put XRP on the spot and put Ripple out there because now is the best time ever to do it. He said, thanks FinTech Frank for having me on and not holding back the tough questions. As discussed, once banks have regulatory clarity, there's little doubt in my mind that they'll use these technologies. Obviously jumped the gun when I predicted 2019 was the year banks would use ODL. So in theory, he was not wrong because, I mean, in 2019, they were using it already. But I think the whole world and how they see crypto has changed so much over the last couple of years. And especially with the whole pandemic right now and the fact that things are going online, it was a short-term stall, but longer term, it's actually a really big plus because I think even though they're trying to get rid of cash, which I don't really like, and I think a lot of you guys don't like either, they are helping a Ripple-based standard coming up, as a lot of these entities will have to try and do their best to do things online, and since XRP is all online, it's another step towards that direction. So I think in the end, it's actually a very positive thing, and even though 2019 might have not been the year, he can't know. They're just trying to get as many partnerships as possible, and who can know when things are really going to catch on, right? It's a snowball, as we've said before. Again, I'm still very freaking bullish, but there are a couple of things which, in my opinion, just don't make sense. And even though I don't like Magic Poop Cannon too much, he's a very popular analyst, and a lot of guys have their opinion on what he draws, since it does make a little bit of sense, right? It does make some sense whenever he posts things. And for one, look at the RSI and look at the price. It's kind of counterintuitive what we're seeing right here, if you're asking me, honestly speaking, all right? Why is this going down while this is going up? So we're going to quickly read his story here. Why? Because I think it gives you some perspective into how we're seeing the stock market and why the prices we're seeing do not make that much sense. I mean, you could even just check the comments here and understand that what's happening here is pretty damn abnormal. It's just illogical. But let's quickly read this. It got 500 likes in a day or 3, so it's definitely worth a watch. The stock market, where to begin? I would say that it's strange and unexpected how the market had such a powerful recovery after the onset of the global pandemic. But it really isn't strange or unexpected. When you consider how and why the market got to where it is in the first place, it all makes sense. The answer is simply the Fed. When the recession of 2008 hit, the Fed stepped in with a quantitative easing, 3 rounds to be exact. During QE1, 2, and 3, the Fed created approximately $5.5 trillion. That money was used to buy treasuries and bad mortgage-backed securities, but ultimately, the majority of it filtered its way through banks into the hands of investors and into the stock market. It's important to note that leading into the pandemic, there was a quiet collapse of the US banking system when interest rates in the overnight repo market suddenly spiked from 2 to 10%. This was due to banks across the country running out of reserve capital, forcing other banks to increase their interest rates by 500% in order to compensate for the elevated risk of lending capital to other banks. The Fed immediately stepped in and created upwards of $1 trillion in new capital so that banks across the country could meet their reserve requirements. Then, when the pandemic hit, the Fed and the US Treasury assisted the US government with over $7 trillion in stimulus. That's in addition to the trillion plus that was created to temporarily feed the reserve requirements of banks around the country. The money that has been created this year alone dwarfs everything that the Fed pumped into the market during QE1, 2, and 3, so it's no wonder that the market has shown such a strong recovery. All of those trillions were filtered right into stocks, and the prices reflect it. Despite that, things are looking strange in the technicals. Here on the S&P 500 weekly chart, you can see that the S&P has printed an enormous broadening wedge over the past 2 years. What we can see there is just, it's been broadening, right? This is called a broadening wedge. Over the past 2 years, a rare formation for an index, showing extreme indecision among investors, as they're either very, very bullish and very bearish at the same time, kind of, right? We have such huge volatility, so to speak. That's very strange in an index this big. Furthermore, we can see that the RSI and the money flow have been both forming consistently lower highs. So basically they're going down, while the market has continued to print higher highs. So RSI is going down while the market is printing higher highs. So this is higher or lower lows or lower highs, sorry. So this is just having a downtrend. This is having an uptrend in general. It's rather strange if you start to think about it, because, well, why would these highs keep on getting lower when people are literally buying more and more and more? So it's getting to underbought territory while the prices keep going up like that, right? It's rather strange. If you start to think about it a little bit further, where were we now? I think the exhaustion of bulls is evident here, despite how powerful the market looks. The S&P is in an all-time high territory, and it could definitely head even higher. Fed Chairman Jerome Powell has made it clear that the Fed's support will continue the market indefinitely, and one of the most famous rules in trading is don't fight the Fed. They're trying to generate inflation right now, and obviously, their primary method is by dramatically expanding the money supply, and while money supply expansion will temporarily elevate stock prices, it can't help but realize that the extent of it, in the face of uncontrollable debt acquisition, will result in a terrible ending. They say don't fight the Fed, but the Fed is playing with fire at this point. Who knows how long the house of cards will stand? All I know is that the current course of action is unsustainable without question. The reality of this chart is that the price action appears to be breaking out above the broadening wedge pattern while at all-time highs, and while indicators continue to print huge bearish divergences, the key to this chart is paying very close attention to whether or not the price can stay above the broadening wedge. If it can, there's a good chance stocks could rip high regardless of the bearish divergences, as the Fed continues to pump the market with the fresh cash. On the other hand, if price fails and falls back into the broadening wedge formation, I think the exhaustion in the market could produce a violent sell-off. So right now, if you check it properly here, you can see we're above there. And I think he's meaning that we will stay above, right? Above the top of the wedge. At least that's what I'm feeling, because, I mean, if you went the bottom here, that's about 2,000, which is about a 50% decline in the market. However, some guys were theorizing about an 80%. No, he's definitely talking about above here. Let's quickly check where we are at right now. I don't think it's going to be easy to see this change since it's a weekly. But yeah, that's definitely rather interesting to see that, guys, to see how we are going to maybe stay above there. So going to get some crazy percentage return over the next couple of years then. However, take into consideration this is a weekly. So we would go from about $3,600, let's say, dollars to about $3,800 in the next year, which is definitely not that crazy if you consider that it went from about $2,100 to almost $3,600, $3,700 in the span of a couple of months. Yeah, from that perspective on forward, it's really not that heavy if it goes to about, if it goes up $200 in the next year. That's really not that nice. But he's saying that as a baseline, though, we should stay above this wedge on the S&P. And I don't mean to tell you guys about buying or selling S&P. All right, I don't mean to lecture you guys on that. What I mean to talk about here or think about is just the fact that this does not make a lot of sense exactly what's happening. And I think logically that point follows on as well. XRP and stuff like that. People sometimes say, yeah, it doesn't make sense for the price. It doesn't really make sense why people are buying that. I think with a lot of these things, there's a bigger theory behind it, right? There's some bigger thoughts behind it. And there's some people who claim 100 times per XRP can happen, and some people say that's never going to happen. I'm just going to say a lot of the things you're seeing here are just speculation, because we're talking about things that are unprecedented. We're talking about things that have never been witnessed and nobody can even grasp the reality of. What we're building here is so different from this manipulation in the market, and thus you're talking in this case here about normal price movement, right? And some people want to compare that to what can happen to crypto, because this is normal in the sense of the Fed is manipulating it, but it's all normal money that's already being generated out of thin air, though. I mean, it's kind of strange, but it's kind of normal. With crypto, theoretically speaking, it's normal money, but we don't know if the Fed will pull such a thing as well to maybe manipulate the prices of these crypto. Maybe they want the correlation to be direct so people don't hedge in Bitcoin against inflation. It could be the case. Who knows? But also, things don't happen as obviously as they seem. Maybe some way bigger plan is already going on with governments with crypto to either hoard it, to get a big hold of it, or something along those lines. Who really knows? Because here, we are talking about multi-trillion dollars, right? We're talking, for example, somewhere here in about $7-8 trillion. Bitcoin's market cap is only 340 billion. So with just that 1 trillion, you could buy Bitcoin 3 times, or you could buy the whole crypto market twice with just one. And now we're talking about $7 or $8 trillion in 1 year, potentially. Are you guys getting that for a little second? So that's maybe buying Bitcoin about, let's say, 25 times, with just that amount of money. Or buying the whole crypto market maybe like 16 times, 15 times maybe. If you think about that, then what we're witnessing here is just, first of all, very, very small, and also very manipulatable, and also something that can trade way, way, way higher, because we're not really at any point yet where it's serious money. XRP is worth only 14 billion. Do you guys fathom that for a little second? Do you get that? That's nothing in comparison to the big money we're talking about here sometimes, and what the Fed can do if they want to pump some money in. Let's say they just pump in 100 billion, right? For example, that's XRP's whole market cap times 7. Have you guys thought about that for a little second? That's the whole market cap times 7 if they just pump in 100 billion. So that's all your XRP you're talking about, 7 times over that they were to pump in. And if you're talking 1 trillion injection in crypto, it's going to triple all these prices, theoretically speaking. Like that. And I'm not saying the Fed is going to inject money. I'm just trying to give you guys some thought about things are not as rational as you seem. And those negative, bearish claims saying we can't go there, we can't go there, we are nowhere just quite yet. These prices are just the start of something bigger, which is also why I'm so scared to sell off my coins, because I don't think, first of all, we'll ever get a chance to buy very, very cheap again. I'm kind of doubting that. But also, I think all these prices still are pretty damn good buy-in points for where we're eventually going to be going. Because yes, guys, I'm very bullish right now. Crypto is showing me the sign. It's showing me the way. And I think everything is going to be juicy. But that was it for today's video. Hopefully you all enjoyed it. If you did, make sure you press the like button and subscribe and think about it. All right, think about it.